The whole package is made up of 5 templates. We have the asset register, the budget template, the cash and bank reconciliation template, the expense and petty cash template. That one is 2-in-1, and the income template. So I'm going to describe how each of them, how they work now, so that you'll be able to see it. So the first one I'm going to talk about is the income template. The income template is made up of the income tracker and the dashboard. So how do you use this? The first thing is, once we want to use it, pick the date. Let's say today is 29th, so we drop down to the date, 29 of which month? June. So apart from date and month, there is a place where we can pick the term for the school. So let's say we're in 3rd term. So we can put it. Then we can put the details of what was done. Fuel or generator. Now this thing looks so small, so you have the opportunity to increase it. You can increase it to any size you want. Then meanwhile, before we go on to category, let me show you. For the expense category, you can put your categories here. Maybe all those categories that you have, maybe generator, maybe fuel, maybe motor cars, motor vehicles, salaries. You can put anything you want. It's not limited now. You have the access to put whatever category of income. Okay, sorry, this is income. Let me put income. Maybe you make income through school fees, maybe books, maybe renters, etc. So you can put all the categories, all those sources of income for the school, you can put them here. Then so that when you get there, you can pick that category, whichever category you want to pick. Maybe school fees. Then you put amount, maybe 50,000. You can see it's already showing on our income summary. So by the time you do that, pick the next one, maybe 8th of July. Then you pick the term too. Maybe let me just put first term or anything. Maybe June salary. Then under category we can pick sale of books. So under category you can put the category books, whatever category you have the freedom to put them here. So maybe sale of books will be 25,000. Then you can move on to next one. You pick the date, 3rd of August. Then you pick the term. Let's put this one, let's put 2nd term and put use of school hall. I told you can always increase this. If it's too small, you can increase and reduce any of those columns. So we can pick now, you can pick under renters. And let's say it's 80,000. So it's recorded. You can see it's already stating all those balances here under each of the categories, populating each of the balances under the categories. So that's how we're going to make all the recordings of all the incomes you are making. Remember, you can make as many income categories as you want. And we can always increase all these sizes if you want to increase the size. You can always increase the size. Now, if you go to the dashboard, you will see it's already showing on the dashboard. You have total expenses for the 3 terms. You have first term, you have second term, you have third term. So apart from the keeping the record for the time, you also keep for the these are the times. These are the totals for each term. Then these are the terms for each of the categories. So you can have all your different income categories here and the amount you are making in each of the times. First term, second term, third term. Apart from the times, you can also keep monthly reports. You can see the month starts from September. Since school resumes in September, school year is always from September to August. You can see each month is June, July, August. So it should be doing income analysis for each of the month for you. And likewise, you'll be having income analysis for each of the times. So you can see how much you make per term, as well as how much you are making monthly. So everything is stated there. It's more flexible this time around. Now let's go to our expense tracker. The expense tracker is made up of 3 worksheets. We have the petty cash, and the main expenses, and the dashboard. So I'm going to show you how we can make use of the 3. Now let's talk about expenses. So the first thing to do is, as usual, is to go to these expenses, state your expense categories, maybe fuel, maybe generator, maybe salary, maybe rent, just anything, drugs, any category that you want to put. So any of the categories, we can put it there. So the next thing is, now that we've done that, we can now start doing our recordings. Maybe 2nd of February. Maybe you pick, that is the day and the month, you pick the time. Is it first time? Is it second time? Is it third time? Let's say first time. Maybe oil for generator. Then you pick under the category, the same thing you listed here. You have the freedom to list it. Let's say we are putting it under gen. Then the price, the cost, maybe 30,000. We can move on to the next one too. Maybe it's on the 5th of October. Maybe that is second term. I'm just picking them randomly. Maybe that is second term. Monthly staff salary. Then pick the under what category. You know, we've listed it. Salary. Let's say 100,000. Let's look for another month. Another one, maybe 26th of maybe June. Any day, just call the day. You pick the time. Let's pick second term for this. Maybe you are paying fuel, or maybe an equipment for machine that you are using maybe in one of your labs. Then you can put the category. Maybe we are picking fuel, maybe 4,000. So that's how we are going to do it. And we've been able to record all our expenses. If you go to the dashboard, You see showing on the dashboard. Total expenses first time, second time, and we have it also analyzed per term here based on each category, and we have a monthly analysis here also under the month. You have the monthly analysis. And apart from that, now let's say you have some balances brought forward before you start using this template. Maybe you've incurred some expenses that are not recorded on this template. Same thing with income. You can put them here. Maybe you've spent 500,000 naira so far. Before you started using this template, you can put it here so that if you had it, you can see it's already adding it to the expenses. It will show it under the terms because it's not recorded in this template, but carry down from maybe your book, from all your record. So you can see it here. You can see the monthly expenses also analysis there. So we can go to petty cash. Let me show you how the petty cash works. Petty cash works with the impress. So let's say you have 3 impress accounts. Maybe you have kitchen. So you put them here. Kitchen, maybe you have impress for kitchen. Maybe you have impress for cleaning. And maybe you have impress for your clinic, your sick bay, and put everything together. If you look at the expense category, the same thing you put under bill expenses here, it's already showing here because it's going to add everything together to show you how much you are spending. So let's say the first in the first day of the month, your first day of the month, that's in, let's say, January, maybe in first term, you are giving impress. That is coming in, is the money coming in. And we pick which of the impress account. We have kitchen, cleaning, sick bay. So let's say it's coming to kitchen. And the category is, there won't be category since the money is coming here. Let's say 50,000 coming in. So if you check under kitchen, you can see the 50,000 is showing as balance in the kitchen for petty cash. Let's say the same 1st of January. Let's say second time, this time around, I want to use another term. Maybe it's also impress. And the money is coming in also. Now let's say which impressed account is this? Let's say cleaning. Maybe 40,000. Let's say 1st of March. Okay, 1st of April. Let's say 3rd term. And it's also impress. We are putting impress in those accounts. And the money is coming in. The third impress account, maybe it's our sick bay. We are putting in 25,000. If you go and check and see, each of those amounts is already in all those different petty cash. So it's stated there. Now, let's say we are spending now. Let's say the first one will be 2nd of January. Maybe that's first time. Maybe we are spending in kitchen, and we can't be impressed. Let's say we are buying fuel for kitchen. So we pick kitchen here, it's out, we pick kitchen, then we pick our category, maybe fuel category, and it's under kitchen, maybe 6,000. So we've recorded that. So that course, we're going to record all our expenses. So at the end of the month, if whatever remains in the balance for the impress, we are going to put it. Now, if you go and look at all those impress account, you can see that kitchen is now 44,000 because we spent 6,000. The same way, by the time we are recording and picking the right impress account, whether it's kitchen or cleaning or sick pay, or whichever impress, the petty cash impress that you are keeping, it will be deducting it here. And if you add money to it, you should add it here to show your balance for that impress. And likewise, as you are picking the categories, you can see 6,000. You should be adding the categories here to show what you have spent. So now, if you go to a dashboard, everything you have under expenses and petty cash is being added here. You can see first time 36,000, second time 30, third time, and it's also keeping it timely here under each category. What you have here is the addition of your main expenses and your petty cash expenses. It's already adding it here. And you can see you have monthly record also being kept here. So if you want to separate them, you can always separate. You just duplicate this, use one for major expenses, use the other for petty cash. And if you want to add it later, you can add it. That's how this particular one works. Now, the third one is the asset register to record your asset. The asset register have just one page. Now, do you record here? We are going to bring all the assets we have as a school here. Now, let's say we bought a generator maybe 10 years ago, or maybe 5 years ago. Whatever time you are going to bring it in, date of purchase for that. The first thing is the date of purchase for that particular asset. Maybe it was purchased on the 23rd of June, 2020. So we are going to put it June. The month comes first, 06, 23rd, 2020. You can see 23rd of June, 2020. Let's record the asset generator. We bought a generator. So under the category. Now, before we move on to that, let me show you. You also have opportunity to put the categories you want here. Maybe land, maybe plants and equipment. Category, maybe vehicles. Any way you want to categorize your assets, you can have them here. So now let's go back to our schedule. So pick the asset category. For generator, that is plant and equipment. So for plant and what is the status? Is it new or existing? We bought it 2020. You can see we bought it 2020, so it's existing. What is the useful life? Maybe we've said, okay, we want to use it for 6 years. Put 6. The original cost when we bought it, maybe we bought it 300,000. So we put it there. Salvage value, what do we think will be the value by the time we stop using it? Maybe it's going to cost like 1,000 naira or 0 naira. If it's 1,000, put 1,000. So you can see it's showing a depreciation for the year, the accounting depreciation on straight line depreciation, showing a current year depreciation here. It's showing accumulated depreciation. You know, we've been using it since 2020. It's going to calculate all the depreciation since 2020. The one in 2021, 2022. So we have 2 years already. So it has calculated everything. So this is the book value now. From the original value of 300,000, it has reduced it by the accumulated depreciation. So we have 200,000. So that's how we're going to record all our assets. So let's say we bought an asset last month of May. So May, maybe we bought it 1st of May. 1st of May 2022. Maybe we bought a new bus. So under category, the bus will be vehicles. You can see we just bought it, so we say new. What's the useful life? Let's say we are saying the useful life of the bus will be 10 years. You can put 10. And what will be the cost after? What's the original cost of the bus? Maybe we bought it 10 million. So what will be the salvage value after? Maybe 100,000. So you can see we bought it 10 million, 100,000. Current year depreciation, no depreciation because we just bought it this year. So it's showing 0. Accumulated depreciation 0 because we just bought it. Then the book value is still the same 10 million we buy it. So this one is going to remain like this. As time goes on, it will be changing on its own as calculating the time. All we need to do is just record the asset once and for all in this register. And as time goes on, there is a calendar already embedded in it. It will be calculating depreciation every year and the accumulated depreciation and the book value. So if we go to asset summary, you can see we have land, plant and equipment, vehicles. You can see it's showing the value of our total assets that we have, that you are having as a school, the book value now. You know the plant and equipment has depreciated by 200,000, 10 million. So we have the total value. So this is how the asset register works. So you just make sure you bring in all the assets and you keep everything in there. Now let's go on to the other template, which is the budget template. This is the budget template. How do you use the budget template? You put the period. Maybe we are making a budget for first term. We are going to put it there. Now, what is our expected income for first term? Maybe we are expecting 5 million. Now I said you can increase the size and reduce the size for everything. And now, how much are we budgeting for out of the expected income? Maybe we are budgeting 2.5 million for the first time. So you can see we have a total budgeted. We have the balance. We don't start spending anything. So we have the freedom to put our expense category, whatever category we want to put. Maybe maybe vehicles, salary, and put whatever you want. Kingdom, investment, transport, anything, any of your category, whatever you wish. Now, we go on to budget. How much are we budgeting? There are two ways. Either we use percentage or the actual amount. So if we are using percentage, maybe we are budgeting 3% for fuel. We're putting the 3% of that 2.5 million. So it's giving us 75,000. So maybe vehicles, we are putting 10% to spend on them. So we can see it's giving us that 10% is 250,000. If we are doing the budget based on, instead of using percentage, we are using the actual amount. Let's say salary, we are budgeting 1.2 million, 1,200,000. So you can see that's 1.2 million. Maybe for kingdom investment, we are budget 500,000. So it's either use percentage or use the actual amount. So it's giving us there. So we can always check how far we've gone with our budget, with actual spending. So you can go to your expense template and look at all these categories. How much have you spent? Maybe in our expense template, we've been able to find out that, okay, on fuel, we've been able to spend 40,000. Yeah, you can see it's showing a variance of 35,000 now. Maybe on vehicles, we spent 200,000. So it's showing 220,000, showing 230,000. Maybe on salary, instead of 1.2 million, we spend 1.5. So it's showing us a deficit. That's why it's in red of 300,000. That's how we're going to have it. And of course, it's giving us the total balances here. So we have up to almost 30 different expense categories that we can put here for our budget. So we can always increase the size, we can decrease whatever we want. So that's how the budget template. The last one is our cash and bank reconciliation template or register. We can use this to reconcile our bank and cash balances. So how do we treat this? The first thing to do is we put our terms, first term, second term. We can use it for a whole year. We can use it for terms. We can use it for months, depending on the period. But it can work at the time for our full year, full academic session. So second term and the third term. Third time. So the next thing is, okay, we'll put the different banks we are using. Maybe Zenith Bank, maybe UBA, maybe First Bank. I'll put the account number of those banks. Our account numbers in those banks. So now, when we want to record, we are going to look at, okay, the last, our opening balance will be the last closing balance for the previous period, maybe last month, if you are doing it for the new month. So the closing balance as at the end of last month will be the opening balance for this month. Maybe here is 70,000 that is left in the account. So put 7,000. Maybe this account 50,000. Maybe this account 5,000. So we put all those balances, put them here. So now for the previous month. Now let's say cash. Let's say we have some cash with us at the beginning of that month also that we want to reconcile. Maybe we have 5,000 naira. Our cash, put it here. So we can now go ahead and start recording our transactions. If we can either be doing it as we are making those transactions or at the end of the month when we want to do the reconciliation. So we can put, okay, for maybe first day of that particular month, maybe of June, first day of June. Put the period, is it first time or second time? Let's say first time. And what happened? Okay. Purchase of book. Everything we do on our account, whether money comes in, as long as it goes through any of those accounts, purchase of book. So let's say we bought books for 20,000. So we are going to pick the account. Maybe this is a transfer that we are going to pick the account we use in making that transaction. Is it Zenith? Is it UBA? Is it First Bank? Is it from cash with us? Let's say it's Zenith. So put Zenith. Payment type. Of course, it is outflow because we are making payment, not that somebody paid us. Outflow. So the next thing is we are going to state the status. Have we made full payment? Is it part payment for our record purpose? Is it advanced payment so that we can always refer back to it? But let's say it's full payment. Then we are going to categorize it, what we use it to buy. So is it an asset? Is it loan repayment? Is it expense? Is it income? Is it internal transfer? Whatever we bought, okay, purchase of books, of course, it will be expense. So we've recorded that one. You can see, if you go and check Zenith Bank, you can see opening balance 70,000. Balance as at now is now 50,000. So it has deducted that from our balance. Now let's go to another payment. Let's say 4th of June. and it's maybe second time. Maybe we buy, maybe we bought food, and we bought it for 2,000. And instead of, and we bought those one from cash with us. So we're going to do that outflow. And is it part payment or balance of payment? Maybe we are making a balance on the previous payment, whatever, or maybe it's part payment. Let's say it's part payment. Let's say it's the 2,000 is part payment. We pay it. Maybe it's actually 4,000. We are paying 2,000 to part payment, and of course we put expense. So if we look at the balance with our with cash here, from 5,000 it has reduced to 3,000. So it's showing balance as at date 3,000. And now let's say we are releasing money for petty cash, because all those ones. So we are releasing money for petty cash. So just maybe 3rd of June, we are releasing money, and maybe it's first term petty cash, maybe for kitchen, said in another template. So somebody's keeping the maybe 50,000. Release 50,000 to kitchen, and we collected that cash. Maybe we collected it from our UBA account, and it's outflow. And let's say it's full payment, of course. Of course, all our petty cash is expense. So we've done that. If you check UBA, you can see the balance in UBA account is 0 now. So now let's say somebody paid us, somebody bought something from us. Let's check inflow. Maybe somebody bought something from the school on the 5th of June, and maybe that time it's a 3rd term, whatever. Customer payment on all renters. You can see it, can't take it. So we have opportunity to increase the size. Now, you can increase the size. So amount, maybe the person is paying us 150,000, and it's paying to a UBA account. So we put UBA, and we put, is it inflow? Inflow. Maybe the person making part payment. Maybe it's actually 200,000 and it's making part payment. Then the next one is it what income? Yes, it's income for us. So if you check, you can see that our UBA account is now having a balance of 150,000, because 150,000 just payment. And that's how we're going to have that on and on. Any transaction that goes through any of this, you will record it. Now, do we use it to balance our account? Maybe bank charges too, you record it there. Now we check a statement. Now let's say Zenith Bank, the balance on at the end of the month, we are through with the month end, and the balance in our Zenith Bank account is 40,000. You can see that it's showing a deficit of 10,000 here. So that means probably there's a 10,000 that came in that was not recorded. So let's say we check our bank balance also, that we've not recorded in our statement here. So we check our bank balance also, and UBA is showing from 50,000. You can see. It's showing an overage 150. So that means there are some things we've not recorded. But let's say we are having it and it's showing 150,000. So it shows that this one is balanced because the balance is in the bank is 150,000 and the balance in our account is 150. You can see there's no difference. So that's how we can use it to reconcile our bank account. And also, we can use it to reconcile our cash. You can see we have cash of 3,000. Now, at the end of the month, we can count the cash with us. Let's say we have 100 naira, which is 10, and we have 200 naira, maybe 7. Maybe we have 500 naira, 1 that is left. So you can see showing a shortage of 100 naira. That means there's something wrong with the account. So the cash analysis must be equal to what we have in our book. So through this, we can use this our cash and bank reconciliation template to reconcile our account in bank. Every transaction that goes through our bank account, your bank account, and your cash, the cash with you, everything will be recorded there, and you can use it to balance your account at the end of the month. If you need any explanation on any of these templates, I'm ready to explain better. Please just watch the video, ma, and you'll be able to get everything needed. Thank you, ma.